Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Well, Yatin, there's a lot of excitement building up at the start of the trading day, given the fact that we were so close to, record levels. And in fact, on Friday also, we shut shop around that above that 18,800 mark. And today we just came within kissing distance of that 18,881 odd mark. But, we didn't manage to hit that level. And in fact, towards the second half of the session, the Nifty did take a U-turn. And now we have ended below that 18,800 mark. And but if you look at the mid and small cap indices, they fared better than their large cap peers. They came off days high but managed to end, in the green. If you look at the sectoral movers, IT, pharma, PSU banks, these were among the top gainers. But if you look at the private banking lot, they were among the top losers on the index. So if you look at the top losers on the index, Adani Enterprises, I think that stock lost somewhere around 4%. You had Adani Port also among the top losers, Kotak Bank, Axis Bank, Hero Motorworld, some of the other losers. On the gaining side, you had Bajaj Twins, Bajaj Finance and Bajaj Finserv emerging as the top loser. In fact, gainers, you had HDFC Life, Tech Mahindra, TCS and Sun Pharma among the top gainers on the index. But if you look at the mid-cap end of the markets, MRPL, that stock was up somewhere around 8 to 9%. 5-star Business Finance, this stock was also up 7 to 8%. JSPL on the back of the Kotak upgrade was up 7.5%, shining bright in today's session. Aside of that, other mid-caps that were in focus, Yatin?
So, Nandita, we'll have PM Modi visit the US on 21st of June. 21st of June is when he lands in New York. And on 22nd, he'll be there in Washington. And if you were to believe the news reports which are circulating, they suggest that there will be a historic defense deal between India and US. There would be drones, there would be technology transfer with relating to jet engines that could benefit Indian defense companies. So today a lot of these defense counters were active, be it Mishra Dhatu Nigam, Hindustan Aeronautic, BDL, BEL, BEML. Any defense counter you name, and they were hitting fresh 52-week highs in trade today. In fact, if you look at a few of these stocks, we had Data Patterns, also one of the defense companies in the private sector, up 3%. Mazgaon Dock was up 3%. We had various other stocks like BDL, HAL moving by nearly 1.5%. So strong gains coming in the defense space after reports suggest that there could be some big defense agreements between India and US, probably that could benefit Indian companies, because there is indigenization and make in India that will be pushed as far as the Indo-US defense cooperation is concerned.
Right, the bulls may be fatigued, but defense stocks are not, and that's why they were high flyers rather in today's session. Let's look at the stocks that are on our radar on that note. Starting with Nykaa, Yatin, this stock was up 7%, I think, on Friday after its analyst meet, and today as well it has extended its fashionable gains, if I should say so, up 4.5% or thereabouts. Now, a lot of brokerages have come out with the positive reports on the stock after the analyst meet, where the management highlighted, the positive it had on its profitability going forward. And Nomura has in fact a buy rating on the stock with a target price of 183. It says that the stock rather is attractively priced given the kind of growth outlook that it has given. Jefferies too has a buy rating. It has a target of 200 rupees per share. It says that management sounded positive on the profitability and industry outlook as well. It says that premiumization trend is something that bodes well for the company. The customer retention and its own labels are something that will contribute towards its profitability. That's what Jefferies is saying. It also says that the strong tech backbone will be core to its success. But I had a chat with Saurabh Mukherjee of Marcellus in the morning, and he says that the growth story has been good. It has seen a very good growth in its beauty and personal segment. But the key would be how soon it upgrades its tech platform, right? Because that will be key. It hasn't really been able to do that pretty well. And plus, he says how the company deploys its capital once it generates free cash flow is something that he will be watching out for before investing in this stock. And Macquarie, on the other hand, has also come out with an underperform rating on the stock. It says that the management was pretty evasive on when they were questioned about the weakness in the fashion business. And it says that there's no tangible medium term profitability or growth outlook given by the company, so that's why it has an underperform rating on the stock. So we'll have to see how the company really scales up its tech platform. That according to brokerages as well as Saurabh Mukherjee would be the key to this stock going forward.
Okay, and obviously Nykaa, the stock has been in radar because the stock has corrected despite the fact that it has been one of the profitable e-commerce companies in India, and more importantly after the bonus issue the company also drew some flack from investors. But yes, stock has been recently doing well, especially in the last 2-3 trading sessions. The only stock on my radar, Nandita, today is Ashok Leyland. Now Jefferies has come out with a report. They have increased the target price to 195 from 185 earlier. Obviously not a big change in target price, but the management really was confident when they met analysts last week with respect to the defense business, margin expansion, market share in North and East India with respect to trucks and commercial vehicles. Light commercial vehicles are also having some good demand according to Ashok Leyland. And when it comes to commercial vehicles, they do believe that for the next 12 months the demand visibility is there. Obviously other focus area for the companies is improving their exports, getting more defense orders, because they have almost 80% chance of winning a defense contract when it comes to mobile vehicles. So Ashok Leyland has been doing really well as far as defense business is concerned, and electric vehicle and powertrain business development is another thing wherein the company is focusing their overall business and strategy. So if you look at commercial vehicles, electric vehicles, defense, all of those things fit into Ashok Leyland, probably because of which the stock has been really doing well for the past 2 or 3 trading sessions, and from here on also brokerages expect further upside to the stock of Ashok Leyland.
Right, further upside expected for Ashok Leyland. Also to mention that it is fairly priced given the fact that it has a PE ratio of 37 point something compared to the sector PE, which is in excess of 40 or thereabouts. And in the last quarter, FIIs had reduced their stake, but domestic mutual funds had increased their stake in the company. So that's one stock to watch out for. The other stock was a high flyer in today's session. It was 5-star Business Finance. Mind you, Yatin, this stock I think listed last year in November, and it listed at a discount. But now it is trading at 37% premium to its issue price of 474 or something. Now it's in the range of 640 or something. And now we have brokerages coming out and saying, in fact Nomura has initiated a coverage with a buy rating on the stock, target price of 750 rupees. It says that it is a highly profitable NBFC and best in class, and it is among the fastest growing NBFCs in a niche market. What 5-star Business Finance does is it provides business loans to micro entrepreneurs and self-employed individuals, and it has a very strong presence in South India.
Right.
Now, it had clocked an AUM CAGR of somewhere around 47% with an average loan ticket of 3 crore rupees, And now Nomura expects the company to deliver its AUM at a compounded annual growth rate of somewhere around 30% over FY23 to FY26. And Nomura also says that there is significant untapped opportunity in MSME space, and this NBFC stands to benefit when it comes to unlocking of opportunity. And it also expects somewhere around 50 to 60 new branches to be opened every year through FY23 to FY26. So that's something that it's a very positive report coming in on 5-star Business Finance. But the key risks, according to Nomura, is its inability to scale up in new states and rising competition from banks and fintech. So that is one concern area for this company. But in terms of technicals, if you look at the relative strength index, it is above 67. It's signaling that it's not even in overbought zone or oversold zone. So it's pretty much okay on the technical charts as well. So that way looks like it's a pretty positive report coming in. So let's see how things pan out for this stock, given the fact that it is already trading at a premium of somewhere around 35% odd to its issue price.
Well, that's all that we have on this edition of Closing Bell. Do tune into moneycontrol.com for all your business news, views and updates. And obviously Nandita tomorrow joins at 8:30 AM to give you all the masala on the Lal Street and all the stocks you need to focus on.
Thanks a lot for watching.